Hey everyone, welcome back to another deep dive. We've got a really interesting one today.
Yeah, should be a good one.
Yeah, it is. We're going to do a rapid fire look at three Singaporean companies that have been making headlines recently.
Always something going on over there.
Yeah, always a lot of action happening in the Singapore Stock Exchange. And yeah, we're going to break it down for you.
Give you those nuggets.
Exactly. So you can be the smartest person at your next, cocktail party or investment club meeting.
That's the goal.
All right, so the companies we're going to look at today are Keppel, Genting Singapore, and Starhub. So, are you ready to dive in?
Well, it's a pretty savvy move by Keppel, if you ask me. They're basically consolidating their position in the offshore drilling market, which has, had its ups and downs.
Yeah, been through a bit of a rough patch recently.
Exactly. But here's the really interesting part. They're not just buying these rigs outright. They're actually creating a private fund to manage them.
Ooh, a private fund.
Yeah. And they're using this fund to attract outside investors. So instead of Keppel taking on all the risk themselves,
They're sharing it.
they're spreading it out. Exactly. It's a smart way to, diversify risk and potentially generate even more revenue.
Okay, that makes a lot of sense. So how did the market react to this news?
Well, Keppel's stock did see a little bump. It closed slightly higher on Monday.
So a little bump, not a huge surge.
Right, not a huge surge. It's too early to tell if this is going to be a massive win for them.
Sure, it's still early days.
Yeah. We have to wait and see how this private fund performs and also what happens with the broader oil and gas market.
Right.
If oil prices start to climb, then
Things could look really good.
things could look really good for Keppel. But if the market stays sluggish, well, it might be a different story.
So a potential opportunity, but definitely something to watch closely.
Exactly.
All right. Let's move on to our next company. Let's talk about Genting Singapore.
The casino folks.
The casino folks, exactly. They're the ones behind Resorts World Sentosa. And some big news for them, they just got their casino license renewed.
Big sigh of relief, I bet.
Huge sigh of relief, right? That must have been a big weight off their shoulders.
Absolutely. I mean, that license is essential for their business. And to make things even better, they've unveiled some pretty ambitious expansion plans.
Ooh, expansion plans. Tell me more.
Well, they're looking at a major revamp of Resorts World Sentosa by 2030. We're talking new attractions, new hotels, maybe even a theme park.
Wow, a theme park. That's going big.
Yeah, they're going all out. And I think it shows their confidence in the future of Singapore's tourism industry.
Which obviously took a hit during the pandemic.
Big hit. But it seems like they're betting on a strong rebound.
Interesting. So a renewed license and massive expansion plans. Sounds like Genting Singapore is, well, hitting the jackpot maybe.
Potentially, yeah. But like with Keppel, we have to be cautious. Their stock was pretty much flat on Monday, no big jumps.
Right.
But for investors with a long-term view, this could be an interesting opportunity. If Genting can pull off these expansion plans and attract more tourists, well, their stock could see some significant gains down the road.
Okay, so one to watch, especially for those who believe in the future of Singapore as a tourist destination.
All right, let's move on to our final company for today. We're shifting gears to the tech sector.
Getting a little geeky.
Getting a little geeky. We're talking about Starhub. Now, there have been a lot of rumors swirling about a potential merger between Starhub and M1.
Another big player in Singapore's telecom scene.
Exactly. So what's driving all this merger talk?
Well, it all started with some delayed payments. Both Starhub and M1's parent company, Keppel, pushed back their payments for a 700 megahertz spectrum license. Okay, spectrum license. That sounds important.
It's crucial. It's basically the bandwidth they need to roll out super fast 5G networks.
Got it.
So when these payments got delayed, analysts started to raise their eyebrows. Some speculate they might be joining forces to share the costs before a possible merger.
Ah, so maybe they're testing the water, seeing if they can work together before making a bigger commitment? Makes sense.
Yeah, it's like a trial run. Now, if a merger does happen, it would create a telecom giant in Singapore.
A telecom power couple.
Hmm.
But seriously, what would be the advantages of such a merger?
Well, for starters, think economies of scale. A combined entity would have more bargaining power with suppliers, lower operating costs, and a much wider customer base. This could lead to more competitive pricing for consumers and maybe even a faster rollout of new technologies.
So potentially a win for both the companies and consumers. But I imagine there would be some regulatory hurdles.
Oh, absolutely. Regulators would scrutinize this very carefully to make sure it doesn't stifle competition, because if you only have one or two major players in the market.
Prices could go up.
Exactly. So it'll be a delicate balancing act.
Interesting. All right, so we've covered three very different companies today. What's the main takeaway you would want our listeners to walk away with?
I'd say the biggest lesson is that the Singaporean market is dynamic and full of potential, but it also requires careful consideration. Keppel's move in the energy sector, Genting's bet on tourism, and the potential shakeup in the telecom industry, these all highlight the various forces shaping the market.
And of course, these are just snapshots. There's always more to this story.
Absolutely.
So to our listeners, I encourage you to dig a little deeper, do your own research, consider the broader economic trends at play, and maybe you'll uncover the next big investment opportunity.
Happy hunting.
And thanks for joining us for another deep dive. We'll be back soon with more market insights. Until then, happy investing.